All right, guys. I welcome you to lesson number 2 in the diploma course in basic financial accounting. All right, guys. So this is business and accounting. I'm Prof. Ed. I'm the chief content creator. You already know that. I'm your instructor. Yeah, you can scan my LinkedIn there, and that's the Mundoverse logo, like the virtual college where I work at, and I'm a co-founder there. All right, so we move, we move. The overview of the lesson, we're going to talk about the nature and characteristics of business activities. We are going to define assets, liabilities, owners' equity, revenues, and expenses. We're going to talk about cash accounting and accruals accounting, and we'll touch on the accounting principles. All right. So at the end of this chapter, you should be able to describe the nature and characteristics of business activities. You should be able to distinguish the meaning of assets, liabilities, expenses, revenue, equity, and indicate the concepts of cash accounting and accruals accounting. And yeah, you need to be able to explain accounting principles. All right. So the concept of a business is, any economic activity on a continuous basis which involves the production and purchase of goods for sale, transfer or exchange goods or supply of services for the purpose of earning profit. That is the concept of business. No profit, it's charity, you understand? The business, the goal is to make profit. That's the only goal actually. Like, we can say that no, our company wants to help humanity go green. Those are other goals. The main goal, if you call yourself a business, is profit. Because if you have no profit, you shut down. The business closes. So in accounting, this is what we talk about. We don't talk about other intrinsic purposes or goals of a company. We talk only numbers. That's the language of accounting. It's numbers, money. You understand? So no money, no honey. Yes, the old adage goes. So no profit, nothing you are doing. Your business is bad. So that's first thing you need to understand. The concept of a business. It means we want to make a profit here. We want to make money. That is the goal of every business. One goal in accounting terms. We only look at the monetary aspects. All right. Now, characteristics of business activities. There's an entrepreneur, the guy with the vision who says, I want to open a bakery. I've seen the market here. People like this. I do like this. The visionary, the entrepreneur who says they want to do the business. And an economic activity like that, bakery, you need suppliers who give flour, sugar, milk, this, and then you process, you make now the cakes, this, the products. Like, it's an economic activity. You produce and procure the goods and services, and you sell, to satisfy human needs. People need the cakes. So it's dealings in goods and services on a regular basis, not part-time. Part-time, that's not a business. It needs to be on a regular basis, and you have to be earning profit. And one thing you need to know about business, like profit or return, it's uncertain, but you take a risk now. There's that element of risk. An entrepreneur will take a risk, and they do. And if their business is successful, it goes many years. Look at Google now. It only started, when? 2000, was it? Or late 90s? But look at it now, big company, same as Facebook, only started, I think, 2005. Look at them now, they are now Meta, and you see. So you just need to take a risk, and you need to know that it's uncertain. You can't control that. Once I start my business, the first month I'm making a profit. No, you can't talk like that. Your investors will not invest in your business because that's unrealistic and uncertain. You can't control. They are what are called macroeconomic factors, like the war in Ukraine. Yes, it can affect operations in your country because Ukraine and Russia, they provide wheat, and Russia the gas, the oil. So it affects your business as well, as long as you use those things in your production of your products and services. So the types of business entities, they are what are called sole traders, like just one businessman opens their own supermarket or this or whatever, like, but one person who takes care, like it's their business in their name. That's a sole trader. And then there are partnerships where they sign a partnership agreement, they have profit sharing, this, that. And then there are those member governed bodies, like not-for-profit organization, like a club, football club, this, you know what I mean. And then there are companies now where you sell shares, and there are directors and shareholders. All right, so we move. Now in accounting, there are classes and types of accounts there. We call this the accounting metaverse. There are assets, liabilities, owner's equity, revenue, expenses. Finish. Only those 5 things. That's accounting. You have finished accounting once you understand those 5 things. Because you're going to notice these 5 things are the ones that matter. Like, remember I told you about the statement of financial position. That one now has the assets, liabilities, and owner's equity. And then there's the statement of comprehensive income. That one is the revenue and expenses. And that's where we know if we have a profit or a loss. So these are the 5 types and classes of accounts in accounting. Those 5, that's the accounting metaverse. All right, so assets, yeah, we have 2 types of assets, like, you know, there are current and fixed assets. The fixed assets are long-term assets, like those that can last 1 year or more, you know, like motor vehicles, buildings, like physical assets. And the non-current assets, they have a shelf life of less than 1 year, like cash at bank, this, like, you know, you will see along the way when we'll be giving examples. All right, so we'll give a few examples of assets. For an individual, you can have your residential flat, jewelry, cars. Those are your assets as an individual. And for a business now, factory building, plant and machineries, corporate office, those are assets of a business, like an example. So like there are also what I call tangible assets, like physical assets, those you can touch, you know, like buildings, vehicles, inventory, cash. And then there are intangible assets, like these ones you can't touch or feel. These are like copyrights, patent, franchises, trademarks. As you can see, the Mundoverse logo, you know, as a watermark in our slides here, it shows this stuff is copyright for Mundoverse. You see, like, you know, that's like an intangible asset, like intellectual property, trademarks, and all that. Those are also assets. They have a value. They are put in the balance sheet. And I already told you about current and non-current assets. Liabilities, we also have current and non-current. The current, less than 1 year, you have to pay up. And non-current, long-term, like, you know, debentures, those bank loans and this and that. And then the owner's equity now, that's the capital, like, you know, the money to start the business, the money the investors put in to get the business going. That's the owner's equity. And now I'll give you a snippet into a balance sheet equation. All right, owner's equity is equal to net assets of the entity, and it's equal to assets minus liabilities. So assets, those are the things that a business owns, or you as an individual, the things you own, your cars, your flat, this. Liabilities, those are the things you owe, like you have to pay, you know, you owe, like, you know, that bank loan you have to pay back. So your net assets now, it's just all assets minus all liabilities, and that is equal to the owner's equity. That's the balance sheet equation. All right. So yeah, the owner's equity, the capital I already mentioned, and then there's what is called drawings. When the owner takes some money for personal use, it affects the capital balance because that money is subtracted from there. But now when a business makes a profit, the profit is added to the capital. Yes, it increases owner's equity, as you can see from there. This only happens now if the revenues exceed the expenses in the statement of comprehensive income. And the loss, if there's a loss, it also affects the owner's equity, the capital, which lessens the equity. All right, revenue, that's money coming in for the company. Money coming in, like any money earned by the company from normal trading activities. And there's other income now, you know, that is not like the core business of the company, like interest received, rentals received, but this company is a bakery, you know, like, so the source income is supposed to be sales of the cakes and the bread, this they make in the bakery. But then there are other activities that can bring income, like interest received, rental received, for example. Yeah, expenses I already mentioned, the salaries, wages, insurance, rental, electric, water, that. And there's also what they call depreciation, which is a reduction in the value of an asset. It's also an expense. And now cash accounting and accrual accounting. So cash basis accounting, it means like when the cash transactions are happening, we record them as is right there. But now accrual basis accounting, it doesn't look at the cash. It looks at the, like for example, the rental for the bakery is due on the 1st of every month. So on 1 December, like today, it's 1 December 2022 here in Malaysia. So on 1 December, you have to pay the rent. And now if you don't pay the rent, you don't have the cash that time, you will get it maybe 5 December, 6 December, like that. In the books of accounting, it's already recorded because you have already accrued. So accrued, it's not about when revenue is earned. Anyway, I'll explain later. All right, so for the cash-based accounting, you record revenue when cash has been received from a customer, and you record expenses only when cash has been paid out. This one is commonly used by individuals and the small businesses. It's not very good, this one, the cash-based accounting. You lose it's not good. I don't recommend it. But it's an option, in accounting. But I don't recommend it. The accrual-based now, it records revenue when it is earned. Like even if a customer doesn't pay, but you have done the service or delivered the product, in our books, we already have earned that revenue. That's accrual-based now. And it records the expenses when they are incurred. Like when the rental becomes due, that day it's recorded. It doesn't matter we have paid in cash or not yet, but in our books it's already recorded. It's the standard approach to recording transactions for all larger businesses now, you see now. And it's advocated under both the generally accepted accounting principles. They call it the GAAP. Those in accounting you already know. You need to know this GAAP. It's very important because it's an international standard for how you do your accounting, especially for large publicly traded companies or even private companies. And the International Financial Reporting Standards, IFRS, it only accepts accrual-based accounting, no cash-based accounting. And it requires the use of estimates in certain areas. With the cash-based, there are no estimates because it's about the cash received. That's what you record. All right. So, I think, I will now just touch on the accounting principles. I think there's a slide here we need to delete. It just jumped in there. All right, accounting principles. These are the rules of action or conduct based on assumptions, customs, usages, and traditions for recording transactions. We have that GAAP, GAAP is the body of principles that governs the accounting for financial transactions underlying the preparation of a set of financial statements. So all financial statements, they have to follow the GAAP. If they are not following the GAAP, they are not approved by the stock exchange or this, even the government, it's not authenticated until, if you use the GAAP, you are good to go. So accounting principles are not rigid and subject to changes. They are standard, they are like immutable blockchain. You can't now change or negotiate. No, you have to follow as is. Otherwise, no need for you to do. All right. So the characteristics of accounting principles, the acceptance of the accounting principles or practices depends on how well they meet the following criteria. Number 1, objectivity. Number 2, application. Number 3, reliability. Number 4, feasibility. And lastly, understandability. Because, accounting is of no use if people cannot understand. They need to understand. So it needs to be basic and simple for everyone. And feasible, it needs to have been proven in the past that it works. This accounting standard, it needs to have been proven. And reliable, and it has to be have the user case application. And the objectives have to be clear. So they are divided into two, these accounting principles. We have accounting concepts, which refer to assumptions and conditions on which the accounting is based. They are necessary assumptions or conditions which form the basis of accounting. And then we have accounting conventions now. These are the customs and traditions which guide us in preparing accounting statements. Don't worry, we'll go deep in the next chapter on the accounting principles. All right, so a recap of this lesson. We talked about the nature and characteristics of business activities. And we touched on the accounting metaverse, you know, those 5 things: assets, liabilities, capital, income, expenses. And then we touched on accrual basis accounting and cash basis. And then the accounting principles, we touched on them. And the key source is the Frank Woods Business Accounting 15th edition. And yeah, I already provided the other further reading materials you can visit. So you need to complete your quiz and assignment, and you get your minted module certificate. That's the book, Frank Wood. All right, so you request to me, you can contact me on my email, and we arrange for you to get your quiz, because the quizzes are different. I can't just have one standard quiz here. People will copy or have someone do for them. I want to make sure my students who are taking my courses, they are really doing it, and they are interactive. They get in touch with me, the content creator. So I give different quizzes to different students. It's different, and the assignments same, different. So that's why you have to request to get. All right, guys, good luck. And up next, we're going to now talk about the financial statements and the accounting equation. The real fun stuff begins. The real fun stuff begins there. Yes, you're going to love it. You're going to love it. All right, guys. So that's that. That's my information there. You can contact me and check me out on my website. And I'm sure you saw my QR code for LinkedIn. You can just scan and go inside, like touch and go. All right, guys, I thank you. Good luck. And I see you in the next lesson. Be blessed. Prof Ed out.